Hi traders. In today's video, we will test TradingView Pivot Reversal Strategy. Our little reptile, Iguana, will guide us through the process. The strategy introduces the theory of support and resistance, but it's better to take the words from the detailed page of the strategy. Definition. The pivot point strategy refers to taking balanced trades off of the pivot point. The pivot point points in the direction of where the asset wants to be heading next. Pivot points are often used for day trading and market making, and they are denoted with support and resistance levels that favor the trend an asset is moving in. Takeaways. The pivot point, PP, shows a trader where support or resistance are found in real time. The levels adjust as the price moves and gain strength as the trend increases in either direction. Pivot points are used to quickly identify levels that matter to the market for a bounce or a rejection. Each time an asset trades at a pivot point, e.g. a support or resistance level, and then reverses in direction, the level continuously gets stronger. What to look for? Pivot point strategies range from different use cases. In this section we will highlight a few strategies that pivot point reversal strategies follow. Long entry rule: if the price starts above the pivot point, PP, then it is often recommended for traders to buy near the PP line as it is gaining strength or showing a clear trend higher. Long conservative entry rule: when the market closes at X pips above the pivot point level, this is when a trader would most likely want the market to touch the PP line and take up a trade. This, however, is only true if the line is reliable and stable in its position and direction. Long stop-loss rule: this rule follows the idea that a stop-loss order should be used for a trade if it is a few pips below the pivot point. In addition, it determines that a stop-loss below support 1, S1, allows for more room for error in a trade. Long take-profit rule: this rule establishes a take-profit order occurring at support 2, S2, and if the trade makes it to S1, then a move to a stop-loss order for balance is crucial. Short entry rule: if a market starts below the pivot point, PP, many traders then choose to sell near the PP line. If the line is overshot or otherwise missed and the market seems to be following a downward trend, then a trader should consider other trade moves along the short bias PP direction. Short conservative entry rule: this rule emphasizes the need for the market to be touching the PP line for a decent trade to be made, but only if the market closes at X pips below the pivot point level. This, however, is only true if the line is reliable and stable in its position and direction. Short stop-loss rule: this rule follows the idea that a stop-loss order should be used for a trade if it is a few pips above the pivot point. In addition, it determines that a stop-loss above or 1, resistance 1, allows for more room for error in a trade. Short take-profit rule: this rule establishes a take-profit order occurring at R2, and if the price reaches R1, then a move to a stop-loss order for balance is crucial. Summary. The pivot point strategy refers to taking balanced trades off of the pivot point in the general trend direction of the market. Relative to the pivot point, the pivot reversal strategy utilizes entry and exit rules to help determine optimal trade times and when to take balanced trades. That's the text from the strategy. Maybe we should go to see the winners of cryptos, forex, indices, and metals and how this strategy is translated in results. Now we see the cryptos screenshot, and even I have the sense that waves are not balanced and bring totally unbalance at sea. These waves USDT you see in the image are winners most of the time. I start to feel bored seeing them again and again, but how you can underestimate the wave's power? So we have them in the first place with a 1-hour time frame, a very good profit factor of 2.083, and a positive Sharpe ratio. Only the entries with more than 100 trades are presented in the winners section of the video. The full results as always are located in the XLS unfiltered so that you can manage them the way you want. Moving to the Forex category. The minute time frame rules the positions here. First is the nice pair of USD/JPY at 3 minutes time frame. Nice profit factor of 1.436, enough closed trades, and very good drawdown. Percent profitable is not so good though. If you see the rest of the entries, few touch the hours time frame. Last we see the indices and metals category. The king of the top position is not there. H.K.33.H.K.D is second, bringing FR.40. with 3 minutes time frame is at the top. The profit factor is good, the percent profitable is below 50, and looks like the equity curves have bumps. Before we go to the ranking XLS, I want to remind you that the reason I provide you totally free the raw data of this strategy is to apply your own filter to the data. For example, you may like how I rank them, but also apply a filter to see only the results with over 50% profitability. Now, let's move to the ranking XLS to see something we didn't see often. The sharp nails of the Iguana helped the strategy climb at once to the 4th position. Usually, I see them reach up to the 6th. For the win results column, we have a new top record with 72.72%. 541 results from 744 came profitable, and this is always a good sign for me to favor the strategy. Average profit factor averaged to low, but this doesn't change anything to my eyes for the strategy. The average percent profitable is low. The average drawdown percent is below 50, which is a plus to my standards. The Sharpe ratio is not good, but as I said, you gain something, you lose something else. Overall, a nice strategy. If you have anything to say or suggestions for the current strategies or strategies you want to test, do let me know in the comments. Remember, finding an edge to your trading and applying proper risk management and psychology is the recipe for success. Thanks for your time. Sincerely, the trading elephant himself.